Hey, welcome back traders. I got a great video for you today. There's panic abound in the markets, but the AMC fundamentals remain stronger than ever. The shareholder vote already being priced in on the charts. So to hop into the German markets here, AH9 ticker, shout out to our German friends overseas holding AMC. It's currently open on the day as I'm recording this. And it's putting in a little bit of green, so it's finding support on this long-term moving average currently, the purple one here. And I've also added a long-term support trend line in orange, like so. It is also currently holding as support here, so it looks nice and healthy on the charts right now. This is what I would want to see in a nice, real strong correction here. A nice recovery. Okay, so if this does turn green further into the week, then everything is set for those higher price targets, going back to the old breakout area, like the $20 area. So on the US charts, here's the weekly chart here. There's a couple things of note. So on the last candle close was up here last week on Friday, so here's the active candle in the forming here. So once the week ends, this candle will be locked in here on the chart. It currently could go up or down. There's reason it can go up here. We've had this blue range on the chart for a while, and it's currently within this nice accumulation zone. And there's this red moving average creeping up right underneath here. And it very well may act as some kind of support on the weekly chart here. So if not this week, perhaps next week, once those two touch the candle bar with that red moving average. And remember this when we pull up the GameStop MACD indicator, because AMC's green on the MACD still on the weekly chart. It may continue bullishly here. It looks okay right now. And don't forget this indecision candle a few weeks ago here, about a month ago, where it could have broken up or down, and it did go up from that point. So it is looking to continue. It's just gotten rejected from this moving average currently. Okay, cool. So it's time to be staying calm, holding strong, and potentially accumulating dips on some assets that look nice right now. So not everything looks rough, not everything's going down, but we'll talk about that. So here's the day trading AMC chart. If I zoom way in, so it went down a lot Monday underneath $10, paper hands folded again. A bunch of stop losses got hit is another way to say that. And what I'm watching here on this day trading chart is this very tight triangle pattern right here. Because the apex of this, all this confluence right here, where it just circled, is going to be the earnings report on AMC coming up May 6th. So where all these lines could join, there's actually the earnings on May 6th right here. So even if it dips before then, it may bounce on May 6th or May 5th right before there from this lower gold accumulation zone just underneath $9 here. That'll be the short-term support if it does continue red. If not, then we do have nice targets much higher for the end of the week, up at $11, $12, maybe as high as $13 if it really turns around, which it may do. So it's still on track. Now for GameStop, I'm just gonna go straight to the MACD. So if I go to the, let's start with the daily. So the daily has seen a little bit of green, okay, but the averages, this blue and orange one, so the blue's turning down. That's not a good thing. Also, the green's fading out. How about the weekly? It's red. So this is what stands out on GameStop. compared to the AMC MACD. We've been waiting to see something like this because there's a lot of viewers who are bullish on GameStop and patiently awaiting for a nicer entry, a more attractive share price to enter more heavily into. And with this red weekly bearish MACD bar coming through, it is looking like it may continue here for potentially multiple weeks until a real recovery happens on GameStop. So it's not Denwo saying that. The charts have looked rough for a long time, ever since it started fading out back up here a month or two ago, and now it's red, so that's a real signal there. Keep in mind it's still under all this bear box up above. So what we're waiting for, the real test is going to be a push up to $207 here. And it very well may do that in the near future, but that's going to be the strongest resistance point, is almost exactly at 207 there. There's reason for that. The biggest one being this giant magic triangle that's held and held and held as resistance and just continued to reject the price down and down. So that's in effect right now. It's too early for that confirmation signal. I'll let you know as soon as possible, of course, but not yet. We still might see a hot beverage down here. Be ready for that just in case. Now to talk about some things that are looking fairly bottomed out on the charts. Well, Virgin Galactic, there's reason it went down 70% over the last couple months, and that's mainly due to a lot of delays. And there was an earnings call scheduled on SPCE for May 4th, which is today's video, Tuesday. They had to delay it, and the reason for that was actually the SEC regulations that went through recently. So they've been increasing the requirements on the reporting, and Virgin Galactic just wants to make sure that they're within full compliance of those new regulations, and that is why it's delayed here till May 10th, so 6 more days there. And it's not a huge deal in my opinion, because it looks like it's already priced in for the most part. There was a huge delay about the test launches, so it's talking here as well. It is on the main Virgin Galactic website. I will go ahead and pin that in the comments down below so you can check this out yourself if you're curious or you want to read through it at all. But I'm going to keep things short and sweet, just breeze through this. So yeah, they're even right here on their website, they're saying they don't anticipate it to really affect the previous financial metrics. Okay, so nothing unexpected should occur due to this earnings report coming up on SPCE, and they are talking about the test flight still from Spaceport America to take place in May. So the test flight's still on for May here. I think it got pushed back from February till now, but as far as we are aware, the general public, it's on for May still. Perhaps that flight will go good and bulls will step back in and we'll see a nice recovery on Virgin Galactic. So here's a little bit about the psychology, and sometimes I like to just pull a random Reddit comment here and there for fun. Little mental break from the chart. So, but unfortunately, this person had invested into SPCE at around $50 on a high, and they're down 50% on their position. So I actually appreciate this response here. So this person responded to that loss as looking at it to a chance to accumulate capital and find more companies that you're passionate about and diversify across those, not putting all your eggs in one basket. It's so much easier to wait out the temporary losers when you like the company and believe in its model. And diversification makes it more likely to have something to feel good about when something else is losing. And that's a fair point. So if you diversify a little bit, maybe one of your stocks will start crushing it while your other ones are in the red. So it is from Investopedia.com, and it's just comparing SPCE to the S&P 500. Okay, well, technically Virgin Galactic's up 25% on the year from the IPO. Just a rough estimate here, and the S&P is up 44% almost. So the S&P has actually seen more growth over the year than Virgin Galactic, only because of this recent decline here. Here it is on the chart, so it's down substantially from that high there. I wasn't interested in it and entering back then for a swing trade long. Now it's looking much more attractive, alright, because it's down nearly 70% from that high. We like to buy stuff on the ground. Not at the moon. So there's further signals of why this may be a bottom. We have a very, very long-term trend line here that's currently holding, so that allows for a tight stop loss here on that entry around $20. So a stop loss just below 20 there in case it were to break below here, but be careful with stop losses. We've seen a lot of bear traps. So the short-term support's going to be at 17 here. Nice even 17 about. So that aligns with this falling wedge pattern, and this pattern isn't completely valid. There hasn't been many touch points along this trend line, so we don't know for sure that this is the main pattern at play here on this chart, but it may turn out to be that way, so it's worth recognizing. And the end of that pattern, the apex of that little wedge there, is going to be right at the bottom of that golden buy box at $17. So not only that, it usually will break out before there, and right before there we're going to have the earnings on May 10th. That would be right about here. So that looks nice currently, and there's more. So there's actually also bullish divergence here. It's hard to identify. It just got put in with the close on the day there. But on these lows here, these local lows, so we have this one is a higher low than this one, a downtrend. Jump into the RSI. We have an uptrend here in the making, so as long as this holds somewhat higher than this one, we have an uptrend, which is going to be confirmed bullish divergence going, as long as that doesn't break through. So it's on track there. I like that entry for long-term swing trading. And talking about our other Wall Street bet plays real quick. The reason I say real quick is because we're watching a lot of them and they all look similar. There are very similar patterns taking place on these charts. So if instead of looking at the candle bar prices on this NAKD chart here like we normally do with these red and green candles, I turned on the line chart here, this blue line, so it's the line chart, and I'll even turn off the moving averages. So here's the NAKD price, as simple as can be, and what I'm going to do is overlay the Castor Maritime like so in light blue and SNDL in yellow. Note how closely those patterns match up. There's reason. It's the psychology behind the hype cycles. Think outside the box. Don't follow the herd. So all of these three assets are looking to find support here and continue on an uptrend going into 2022. And we'll keep up with that as long as they're following some sort of bullish continuation pattern, then it's well on track. It may take some time. Patience is key here on these high risk, high reward plays. Look at the daily MACD on NAKD as well. We're seeing strong bullish momentum kicking in. Now, speaking of bullish, well, actually the pre-market is currently open, okay, and seeing a little dip down here, but we're able to identify an awesome breakout entry right when the market's open because people in the live chat were talking about this, so that was cool. That's the power of having an intelligent community, is so once in a while you guys tune me into a really nice entry and we're able to identify an awesome opportunity. So the idea was an entry on the opening with a tight stop loss, and it continued up all day, seeing a nice 15% at the high there. So it may not hold up, but that was the day trade idea right there. And the reason it pumped so much was because some news in India, so their Prime Minister Modi had a political defeat in an election in West Bengal, and there was, voter backlash against Modi for his handling of the pandemic, and that's actually signs of a new wind, and we're waiting for wind to kick up and blow into our sails. So here's CCIV Bay, and I want to show you two main things here. There may be some sort of trend line in the forming in orange here at the top of this accumulation box. That aligns up pretty nicely with the Fibonacci on CCIV. But if it breaks below here at about 1975, it may come as low as $19.20 at the bottom of this blue consolidation zone. That would be normal, and even if it does that, or even if it comes lower from there still, as long as it puts in a higher low from this last bear trap area, then it is looking bullish, and we may see a crossover on some of these moving averages soon in favor of the bulls. So I do like the look of this, and note similar to NAKD, the MACD is bullish momentum for CCIV on the daily chart, so that may continue into a nice real recovery. And to wrap things up, don't forget why we're bullish on this company. Lucid Motors has some sleek looking vehicles well into testing and production. They're ramping up for industrial commercial production going into next year. So that's why patience is key. We're not expecting this to quadruple overnight in share price, but potentially in time it has that capability. So it is from autoevolution.com, and I'll just let you soak in these nice pictures for a minute. The exterior, cool headlight on the front, glass roof. Here's the interior. Nice material, fabric on the seats there. High quality interior, and it's an efficient and drivable design. Compare this to the inside of the Cybertruck, right? It's like driving a robot compared to driving a luxury vehicle. This really does look luxurious, so you can even kick back the seats and recline. Great stuff. Stay calm, hold strong. Happy trading. Take care.